All right, well, good afternoon and welcome to the end of day market review for June 14th, 2012. My name is Jason Waugh, one of the trainers and success coaches with Ideal Trading Lifestyle. I'll be walking us through today's presentation. Now, before we get started, we are going to ask that you give this disclaimer a quick read. Once you're done, we'll go ahead and get started with the market news. All right, so as mentioned, we're going to go ahead and start things off by taking a look at the market news, the number one contributing factor to the overall market conditions. As we can see here, we did end up with a good day in the marketplace, and this is with the markets rising on hopes for some Fed action. This was after the markets turned higher on some uh, initial readings on some of the weak job reports and requirements for the Fed needing some help there. As a result, though, the Dow ended up 1.24%, with the S&P 500 up 1.08%. Oil is also up 1.89%, putting it up to $84.18 per barrel. Gold actually rose as well. It is up 0.44%, putting it to $1626.50 per ounce. So all in all, it was a good day in the marketplace today. However, we need to keep in mind that the rise, again, this is on hopes or expectations. Nothing has been officially determined yet. So it is very possible now that the markets are optimistic and expecting something good to happen, that the Feds will either release something negative or neutral, and that'll put the markets back down into a bit of a downward spiral. So we're going to go ahead now. We're going to take a look at the market sentiment. This is going to include technical analysis on the S&P 500, where we'll be looking for support and resistance levels. We'll also take a look at its MACD. We're then going to switch over and take a look at the volatility indicator. So, looking at the S&P 500, we can see that it's currently sitting at 1329.10. This is just below overhead resistance at a previous cycle high that was established at the latter portion of May. That resistance is around 1330. So seeing this type of resistance just overhead, it does make sense that the markets could end up turning around and going back downhill. And in fact, if we look at the last 5 days, we can see that the markets have been trading pretty flat and really just riding up along that resistance line. Taking a look at the MACD, this is where things have changed a little bit. The MACD has continued to rise since it broke through resistance 6 days ago, and we've now gotten ourselves to a point where the MACD is rising bullish with the black line over top of the blue line. Definitely something that we haven't seen for a little bit here. In fact, it hasn't been something that we've seen until it crossed down into bearish territory back in the early portions of May. So we do want to look at this, and we do feel like we can start to have a little bit more confidence in the marketplace. But we do need to remember that we are still dealing with resistance that's right overhead. And until we break through that, we really shouldn't be too excited with what's going on in the marketplace. Adding to that, the volatility indicator is at 21.97, definitely a lot lower than where it was at earlier, just above 24. However, it is still above 20, and as a result, we need to be cautious with what we're doing, and we need to expect that the markets could turn around just like that. So, with that said, yes, yes, the markets did end up rising, and they did end up improving themselves a little bit today. However, this is all on expectations and hopes. We are still dealing with resistance, and as a result, we really just need to sit back and see what ends up happening. We can go ahead and trade, but we need to make sure that we're exercising caution. Now, this means that for our advanced customers, you're not getting greedy and trying to go for large profit targets. Go ahead and try to take larger profit targets than 1%, but try to do so within the confines of one day. It'd be a lot better to take 1% after a day than try to go for 2 or 3 or 4% over multiple days, because each day we're susceptible to the opening bell and what might be revolving around that as far as opening news and futures goes. Also, It looks like we do have one stock that popped up on our watch list. That was APA, Apache. So looking at this one, we've got our white candle, which is obviously something that we want to see. We've got the MACD rising bullish with the black line over top of the blue line. And now some alarms have gone off here. We look like we've had a tremendous spike in volume. So I definitely want to see what's going on with that. I'm questioning if maybe there's an earnings today. So I'm actually even going to go ahead and pull up a earnings.com. Don't normally do that, but when you have some abnormal volume like that, you just need to ask yourself, why is it that the volume has gone up so substantially? So everybody should be very comfortable with earnings.com. It's definitely one of the easier sites to grab your quarterly earnings reports. All right, so by the looks of it, it's not due for another earnings report until the 2nd of August, 2012. So we're actually free and clear there for earnings. Now, the next thing that we would do is take a look at news. So you can go ahead and you can go to Yahoo Finance or wherever you prefer. I'm going to type in my symbol, APA. All right. So I'm not seeing a lot that's jumping out here. Apache sees potential 3 billion barrels of oil acreage. Okay. Well, that might do it right there. So it looks like this is a energy company. Looks like they might deal with oil. Personally, I prefer to use Google Finance. A little bit easier to grab this news. But there you go. It's great to see a company going up and increasing in value based off of something substantial, an actual piece of news. Earnings that can inflate the price of a stock prematurely, and as a result, it could end up just dipping right back down to where it was. So, looking at the news, that's great news for Apache. Now, going ahead and taking a look at the rest of the technical analysis, looks like we've definitely got some support right here. As for resistance, looks like we've just broken up above trend line right here. All in all, that looks really good. It being bullish, we're not going to be as concerned with some of these cycle highs. It looks like it actually just came up and came near a cycle high here, but it looks like we probably have a percent room for that. So there you go, a stock that might be worth investigating a little bit more. Advanced customers, obviously go ahead and take a look at your advanced charts, see if there's anything more to that equation that might make you opt against this trade, or maybe even confirm that this would be a good trade. Some things that I like about this, just because we don't really necessarily always go back and revisit the disciplines, but a great thing about this is the previous day's low, where we would be normally placing our stop loss, is below a support level. And it's always nice to see our stop loss is being placed below support. It just makes it that much more difficult for that support level to be hit, and as a result, that much harder for your stop loss to be hit. So having that stop loss there is definitely a lot safer than if there wasn't support. All right, so unfortunately, that was the only stock that was on our basic watch list. Not a whole lot else that we can discuss, except for regardless of what we see, regardless of what we like, we need to make sure that we're keeping a close eye on news and futures tomorrow morning. If there's any negativity brewing about, that could be our ticket to cancel our trade and try again another time. So that said, this has been the end of day market review for Thursday, June 14th, 2012. Have a great day.